Most people are about to lose a lot of money this year, and the sad part is they have no idea it's coming. But the people who do know, they're quietly setting themselves up to come out of this thing richer than they went in. I've seen this happen before, multiple times, and today I'm going to show you exactly how they do it. Here's the thing about recessions that nobody really talks about. Every single major recession in modern history created a new wave of millionaires. The 2008 financial crisis, the dot-com crash in 2001, the COVID collapse in 2020. In every single one of those moments, while the majority of people were panicking and selling everything they had, a smaller group of people was buying, and those people got extremely rich. Right now in 2026, we are sitting in the early stages of what most economists are now openly calling a recession. The IMF lowered its global growth forecast to 2.3% this year. Consumer confidence in the US just hit a 3-year low, and the Federal Reserve has been holding rates at levels we haven't seen sustained this long since the early 1980s. This is not speculation. This is the data we have right now. Through exactly how to position yourself to actually benefit from what's happening. 3 clear stages, real strategies, no fluff. Let's start with the problem, because you need to understand what you're actually dealing with before you can take advantage of it. A recession is typically defined as 2 consecutive quarters of negative GDP growth. In the US, GDP contracted in Q3 and Q4 of 2025. That's the official confirmation. What follows that, historically, is a drop in consumer spending, rising unemployment, falling stock prices, and a housing market that starts to crack. We're already seeing all of this. Retail sales dropped 1.1% in January 2026. Unemployment is now sitting at 5.4%, up from 3.9% just 18 months ago. And certain housing markets, particularly in overvalued metros, are seeing price corrections between 8% and 15%. Now here's what most people do when they see this. They freeze, or they sell. They pull their money out of the market, stuff it in a savings account, and wait for things to feel safe again. And that is honestly one of the most expensive mistakes you can make. Because by the time things feel safe, the best opportunities are already gone. The people who got rich in past recessions didn't wait for safety. They moved when things were scary. So let's talk about how you actually build wealth during this. There are 3 phases, and each one requires a different approach. Phase 1, cut the bleeding and free up cash. Before you can take advantage of anything, you need to be in a position where you have something to work with. That means getting your personal finances tight right now. Not in 6 months. Right now, look at your fixed expenses and cut anything that is not essential. That gym membership you use twice a month, subscriptions you forgot you had, those things add up fast. But more importantly, if you are carrying high interest debt, specifically credit card debt, which in 2026 is averaging around 22% APR in the US, you need to attack that first. There is no investment that reliably beats a guaranteed 22% return. Paying that debt off is the smartest move you can make right now. Once you've tightened up and started freeing up some cash every month, you want to build what I call a recession war chest. This is not just your emergency fund. Your emergency fund is your protection. The war chest is your weapon.
Wrong. When the market drops, the instinct is to stay away. But historically, the best time to buy assets is when nobody wants them. Let's look at the stock market. The S&P 500 is currently down roughly 18% from its all-time high. That means quality companies with real revenue, real earnings, and real competitive advantages are on sale. A study from JP Morgan found that if you missed the 10 best trading days in the market between 2003 and 2023, your returns were cut in half. The best trading days almost always come right after the worst ones. So if you're sitting out of the market right now, you're at serious risk of missing the recovery. Now, I'm not saying dump everything into the market at once. That's not smart either. What I'm saying is to use a strategy called dollar cost averaging. You pick a fixed amount, say $200 or $500 a month, whatever fits your situation, and you invest it consistently, every single month, regardless of what the market is doing. This way you buy more shares when prices are low and fewer when they're high. Over time, this smooths out your average cost and puts you in a very strong position when the market eventually recovers. And historically, it always has. Beyond stocks, there are other assets worth paying attention to. In recessions, real estate often corrects. If you're in a position to buy property, either as a primary home or as a rental, you may find yourself with significantly more negotiating power than you would have had in 2023 or 2024, when prices were near their peak. Sellers are more motivated. Inventory is higher. This is when deals get made. Also, keep an eye on distressed businesses. In every recession, profitable, small businesses go under, not because the business model is broken, but because the owner runs out of cash or loses confidence. If you have capital and the ability to identify a solid operation that just needs breathing room, acquisitions in a recession can deliver returns that the stock market simply cannot. Early 2026. If all your money was in one sector, one stock or one type of asset, you got hit badly. If you were spread across different sectors, different asset classes, even different geographies, you absorb the shock much better. Right now, some of the areas holding up well are energy, consumer staples, and healthcare. These are sectors that tend to be more resilient during economic downturns because people still need power, food, and medicine, regardless of what the market is doing. That doesn't mean you put everything there. It means you don't ignore them. And don't sleep on your income during all of this. In a recession, your biggest asset is your ability to keep earning. That means your job skills, your network, and any additional income streams you can build. If your income is stable, everything else becomes much easier. If your income is shaky, even the best investment strategy becomes very hard to execute. Think about what skills you can sharpen, what services you could offer, what you have that other people would pay for. The people who thrive in a recession are the ones who found a way to keep money coming in while everyone else was cutting back. Here's the truth that I want you to walk away with today. Recessions are not the end. They are a reset. Every single recession in history has eventually ended. Markets have recovered. New companies have risen. New millionaires have been made. The difference between the people who came out ahead and the people who didn't wasn't luck. It was preparation, discipline, and the ability to act when everyone else was too scared to move. The data is clear, the opportunity is real, and the window doesn't stay open forever. If you think I deserve it, subscribe and watch the next video. Anyway, I just opened a new completely free community where I explain how to create and scale your YouTube business from zero with an experience with over 10 monetized channels. There I will give you all my tips and strategies to monetize and scale your faceless YouTube channel. And I will help you step by step. Since YouTube is the golden opportunity of 2026, even more than a stock, I'm waiting for you. Just a reminder,